day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, and welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Today is going to be a fantastic video. I've done an incredible amount of research on both the macros and the fundamentals here with regards to the US stock market and the Nasdaq100. And I think that this is going to be a video that you're going to want to replay twice or perhaps, maybe even 3 times over the weekend because it may give a real big indication as to where the markets may be heading next. But just before we start today's video, anyone who's interested in joining my Signal service, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. Also, a massive thank you and welcome to everyone who's joined over the past week. We have just had a record number of you join, so welcome on behalf of myself and the rest of the team here at Daily Market Movements. But let's start with the Nasdaq100. Today we have actually had a key development, and that is that we've gone ahead and created a lower low. We've broken below last week's swing lows, which were all the way down at 11,900. That movement happened this morning, and this chart is looking very negative. I think that we're very likely now to go and target the June 16th lows. Big developments happening here in the Nasdaq100, and this all comes from Tuesday's CPI reading. We all know that on Tuesday we had 8.3% versus 8.1%, and then on core CPI, which is what the Fed looks at, we had 0.6% rather than 0.3%. So the core CPI coming double what was expected, and this is not good because it's most investors were anticipating the inflation numbers to be significantly lower this month due to the prices of crude oil, for example, and gasoline coming down significantly. We've had CEOs like Elon Musk come out and say that the materials to create their products have come down dramatically. So many investors were fully expecting the inflation number to come in a lot better, maybe sub 8%, around 7.9, 7.8%, but we didn't get it. And of course, on Tuesday, we had this horrific trading session where the Nasdaq100 was down 5.52%. Now, I've done an incredible amount of research over the past couple of days, and especially the last 24 hours, and I would also like to reference that I do also read a lot of research from Fundstrat. So some of the charts that I've got for you today are from Mr. Tom Lee over at Fundstrat. So I would definitely like to reference those charts. But for those who've been watching my videos for some time, you will know that I've been buying significant amounts of the Nasdaq100 since we peaked at August 16th. Okay, and many people are looking at this chart now laughing at me saying, oh my God, Max is such an idiot. He's been buying since up here when the market's peaked, and look where the markets are now. But just give me a chance to explain why I've done this. So I've been basically buying the Nasdaq100 every 200 points that it declines, all the way here. And of course I went to profit a little bit on these 2 positions, but as we've gone lower, just like I did at the open today, I bought some more, and I fully anticipate this market to go down to the June 16th lows. And I'm going to continue to buy more and more. The lower we go, the better. I've got a very steep stop loss. I've got a fantastic risk management. And the reason that I am dollar cost averaging in, buying as much as I can towards the downside, is because ultimately I do believe this market will bounce back. And something really interesting happened the other day, which I'm going to go and talk about in a few seconds' time. But before I do that, I just want to pull up a graph. This is a graph of the 1968 to 1985 period for the S&P 500. Now, for those who don't know, the 1970s was a very tricky time for the stock market. We had very high inflation, very similar to where we are trading now. And look at this. Back in 1970, this was the peak CPI. So very similar to what we had the other month where, CPI peaked at, I think it was around 9.3%, I believe it was. And from there, it actually sparked a nice bull run towards the upside. And then again in 1974, we had again another headline peak where the CPI reading come in at around 12%, so very high inflation. But again, once we had that peak reading, it sparked a nice bull run. And then ultimately, we really did peak out in 1980s when CPI hit around 15%. Of course, we're nowhere near those levels at this moment in time. But again, when we had that peak CPI reading, it ultimately sparked a nice bull run in the S&P 500. Now, I wanted to show you a chart because, of course, the other day, the 13th of September, which was a Tuesday, when we had that massive decline here in the Nasdaq 100, when stocks were down 5.5%. It was one of the biggest, I think it was the worst day we've had dating back to June 2020. That was, of course, when the COVID pandemic was around. But on Tuesday, for the 14th time in the Nasdaq 100's history, 0 stocks advanced, meaning 0 stocks ended the trading session in positive territory. This is only in the Nasdaq 100. There we go, 0 stocks. And this is the first time this has happened in the past 2 years. We had an occasion in November 2020 when one stock out of the Nasdaq 100 actually advanced, but look what happened afterwards. It sparked a huge rally afterwards, and it happened on June 16th where we only had one stock advance, and that was pretty much that capitulation period on June 16th when we really did hit those fresh lows for the year. But look what happened afterwards. We sparked a nice 20% rally in the Nasdaq 100 afterwards, and we've just had, for the first time in a very long time, in over 2 years, and for the 14th time in the Nasdaq 100's history, a day where we've had 0 advancing stocks. So what does it mean? Well, if history was to repeat itself, we could be in for a nice significant rally going into that year end. And then the last chart I want to pull up for you all is this chart, which I think is very, very interesting. Now, when the Nasdaq 100 has had a drawdown of 25% or more, 12 months after a trading session where we've had 0 out of 0 advancing stocks, so zero positive stocks in one trading session in the whole of the Nasdaq 100, when we've had a 25% drawdown, 12 months after that date, the medium gain, the average gain in the Nasdaq 100 has been 63.8%. So at this moment in time, we are in a drawdown which is worse than 25%. We all know that. We only have to zoom out and look at the bigger picture for the Nasdaq 100. Let's just have a look just for those who are not aware. At this moment in time, the drawdown in the Nasdaq 100 is 29.5%. And on Tuesday, when the CPI figures come out, and we declined 5.5%. We had 0 advancing stocks in the Nasdaq 100. So what does this research tell us? It basically tells us that from a year from today, so the 13th of September, a year from Tuesday, so from the 13th of September 2023, there's a very large chance that we could rally 63.8%, which is the average gain every time that this has occurred in the history of the Nasdaq 100. And it was only the other day, guys, that I was saying that I do expect a very sluggish end to September. This historically is a very bearish time of the year for the stock market. And it's the first week of October when historically the markets do tend to bottom. So can we still go and break below the June lows? Absolutely. We could potentially go down to 10,000. But that being said, I am going to be putting a lot of cash to work from now up until then, because after the first week in October, that's when I really am anticipating a nice strong finish to the year of 2022. So I just wanted to come on here today and let you all know why I'm so bullish. Yes, I believe short-term the markets are going to go down, but I'm not going to go and, dedicate a lot of my capital to a very short position. Let's say we go down to the lows. That offers 6% downside from here, where even if we just went back to the swing highs in August, that's a 16% gain. So the risk reward ratio just isn't there for me. Even if we went down to 10,000, let's say, that only offers a 15% decline from current levels. Again, if we went back to the swing highs that we achieved just a month ago today on August 16th, that offers even more upside than it does if we were to go down to 10,000. So, yes, I do believe the market's going to go down to to test the yearly lows, but ultimately, come the end of the first week in October, that's when I'm anticipating a very strong end to 2022, where I believe we can go and break back above the August 16th highs, and perhaps go and target around 15,000.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.